I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward to what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market posted a nice recovery this week as background news gave investors hope. And certainly it was an oversold environment that set up the possibility for a big rally. Tariff news dominated this week as early week it really seemed like there was some tough talk coming out of the White House, but the G20 meeting was starting this weekend, and then soon that gave way to some possibility that there has been things that progressed as news came out that the U.S. and China apparently have been talking for some time. That, of course, gave investors hope, and we saw the markets firm that there might be something coming that's positive out of this meeting between Trump and Xi that's supposed to happen at the G20. A big deal coming out of that, well, that's doubtful. They really seem very far apart, especially when you look at what happened between the discussions of Pence and China back a few weeks ago. But they may come out of there agreeing to freeze things for now and keep talking. And with that possibility, and that happens, at least we would expect to see a positive reaction out of the market. If they come out of the G20 and it's not so much positive, then it's pretty likely we'll see some downside in the market, at least when that news comes out. But the biggest move this week came as Chairman Powell, Fed Chairman Powell, came out in a speech really quite dovish compared to where he was. We've heard some back and forth between the Fed heads, but right now what he said on Wednesday was that rates are just below neutral, and that now he thinks that hikes coming, and there's probably one coming pretty soon, according to him and other Fed governors, but that they're going to be more data dependent. In other words, they're going to look things over and not just try to move back to what they called as getting to neutral. When that news came out, stocks launched on the upside. There was just a really big upside move on Wednesday as the shorts scrambled to cover, and anxious buyers who were wanting to use this decline in the stock market, thinking it's just another one of those dips, well, they jumped on in a big way. We saw things move up very sharply, with the market closing basically on its highs on Wednesday. Think about this, though. As far as the Fed fund rate goes, the target for December was 2.5%, and that's probably going to come in that meeting. We're not sure about that. And then their target for 2019 Fed fund rate was 3%, and for 2020 was 3.5%. Now they're at 2.5%, 2.25%, maybe going to 2.5%, and they say they're just below neutral. You can see the damage that was done as the Fed actions and central banks around the world for 2 decades or more have had 2 rounds of extremely low interest rates as we've been in this great experiment now, and they're trying to come out of it, and the question is, can they even do that? But now for the last over 8 years. That leaves us, as you can see, with an extraordinarily fragile condition here in the U.S. and in the markets. That a 2.25 Fed fund rate, and they're getting close to normal. Well, something is really sick about that. one time, and I don't know that it's all that far off, these deflationary forces that they created by causing the bubbles and causing these breaks in those cycles, that's going to give way to an inflationary surge that the Fed will be so far behind the curve at that time that these 12 academics that are the head of the FOMC, and mostly academics, and that are essentially running our country, well, they're going to be running back to their books to see where they went wrong. That is coming, and I think that they're going to find themselves in huge trouble when real inflation clicks in. Everybody thinks they've got control. I don't think so. Stocks, let's talk about the stock market right now. It's following the path of our analysis, as we had suggested that the market had made a low, that the market rallied and tested the low and was ready to move up again. And you can see that really is the pattern that we've been in. That now looks like that rally that we were expecting can go into early 2019. We think that's going to happen. Even if there is bad news on tariffs, we think that the market will not succumb to a big decline right now. And then at that point, I think that we'll be able to move up maybe into January, February. But the risks overall in the much bigger picture are growing, and there's a damage in the market leaders that suggest that there's damage in the market, and we believe that that damage is going to bring problems coming into 2019 and even going into 2020. And that could bring some awfully poor results for the investors. You got to watch our big picture analysis that's coming up in the next couple of weeks, which we produce on a Thursday for our members. And of course, coming to the end of the year, we'll be having our year-end show, which we always do when we look at what happened last year and what we think might happen moving forward. So all of that coming up, and you're going to want to watch that. So make sure that you do become a member. So overall, our outlook for the stock market right now is somewhat positive for the near term, but then we think there's trouble. Let's take a look here as we switch over and look at the 60-minute chart of the S&P 500 with the gray area on this chart being the overnight session and the white area being the trading during the regular trading session. You can see that there was an uptrend almost all week, flattening out here late on Thursday with that declining engulfing bar, and then just basically chopping around in here throughout the week. Early in the week, Russia fired on Crimea ships and grabbed 3 of them. The Brexit deal news came out, and the odds are that it will not pass unless there can be some possible changes in there that Parliament will pass. And Italy agrees that they're going to look at their budget. In other words, they were pretty strongly firm on, well, we're not changing our budget, and the EU didn't like that, but then they said they'd look at it. And you could see we got a rally right at that point overnight as Europe ticked up, and that started really the upside week. Late on Monday, Trump had some tough talk on China tariffs before the G20, and he said that he would also consider higher tariffs on iPhones. Apple took a big drop overnight, and that sent the market down right over there. And then coming into Tuesday, again, Trump talks auto tariffs. The market sells off early in the morning, but then picks up again. Vice Chair Clarida came out, and he was hawkish on rates, surprisingly. He better get in line with his boss out there, but said they would be more data sensitive, and says the balance sheet needs to be as small as possible, but not back down to the below the 1 trillion mark it was where it started out. They have almost not reduced that at all, but now we're getting to the point where they say they're going to start reducing by $50 billion a month. That would be $600 billion a year if they did that, in liquidity that is pulled out of the system. Remember that, because when they put the liquidity in the system, the stock market went nuts and made that low at 666 in the S&P 500. And once they really start earnestly pulling it out, that's going to be a big problem. Bullard came out, though. He said he sees cracks in the growth, and in the meantime, we got an update here on Tuesday. Kudlow helped a little bit, says the White House and China have been talking, and that was the first hint of that, and that continued to be news throughout the week. On Wednesday, we reported a record trade deficit, and again, Donald Trump is out speaking auto tariffs. The market sells off early in the day, but right over here was the Powell speech, and look what happened as the S&P surged like almost 60 points quickly. He says rates are just below normal, and there's no more long way language in his discussion about there's a long way to go. Well, that wasn't in his discussion, and he talked about a solid economy. So solid economy, and we're almost at normal at 2.25%. Tell me who's messing with who. Here on Thursday, Trump said, we have a long way to go on our tariffs. It sold off here in the morning, and then the FOMC minutes and the rally into it were pretty much confirming that they're going to be more data dependent, and there's more rate hikes coming soon. Remember, this is a month old or so they seem to have really changed their tone since those minutes. And here on Friday, we get the market just kind of pulling back overnight, and then that report came out that the U.S. and China have been talking by phone for a couple of weeks, and the G20 is on, and the optics are beginning, as I just saw the president and the Prime Minister of Japan being interviewed live. So that is going on, and it is a good possibility that by Monday or maybe Tuesday that there's going to be some significant movement in the stock market. In the meantime, you could see that this was a beautiful upside move for the week in what turns out to be a extremely strong week for the stock market. Just a solid upside move in there as we look at the results for the stock market for the week, and we see the S&P 500 and the Dow Jones with gains of nearly 4%. The NASDAQ up close to 6%, a giant week as there were big rebounds in these tech stocks and e-com stocks that got absolutely annihilated on the downside. Those are the stocks with some major damage to them. And the Russell lagged, and the Russell was only up about 3%. That would normally we consider that a very good week. The bond market, despite all this Fed talk, was nearly unchanged. It barely moved in there. The dollar, slight gains, up about 0.2%. Not a lot, is it? The gold market, a slight gain also in there, a couple bucks at the best. And oil up less than $1 on the week, and is having a very tough time making the bottom in there, the bottom that we have been expecting now for, well, it's been a number of weeks, and this one has really stretched out. And I'll show you some analysis later on in the show as we look at the short-term view that shows you how there are our cycle analysis is showing shifting in there, and that's what happens when they stay down for a longer period of time. And I will talk more about that when we get into the short-term view. In the meantime, we're going to come right now, and you're going to see our best and worst stocks for the week. All right, best and worst stocks for the week. Before I show you those, I do want to remind you to follow us on Twitter at askSlim and to become a YouTube subscriber. On Twitter, every day we post some chart analysis on there and even articles that we write, and we're making it possible for you to access a history of the articles and analysis that we do. So watch for an announcement on that. So that is, I think, important news. I've got a little more important news for you, and that is you're going to get a look now at our cycle analysis and the type of work that we do. The cycle analysis is something that I have worked on since 1975. So this is really an art form that I have developed over that period of time. I want to talk to you about a special on our Level 4 membership. So our Level 4 members receive our charts on to put live on their own Thinkorswim platform. If you're not a Thinkorswim member and you decide you want to do this, please do write me, and I will send you a special link for the special pricing on this membership this week, and also send you the Thinkorswim, the TD Ameritrade link. We get credit for if you open an account through that. So what I really want to tell you is what our special is on level 4. So you get all of our charts that we do. You get support from me in email, be able to ask me questions about the chart analysis and also about the trader issues that you might have. These are brief emails, talk about strategies or other things that are trader related. You will get our rankings and trade setups, level 3 information, which is an amazing table which shows you 3 time frames of our rankings and momentum analysis and just valuable stuff. Also our option bias indicator, which is in there, and our setups that we put in for stocks, which we do about 2 or 3 a week potentially, that I think you'll find valuable. Also, you'll get all of our level 2 information, which is 8 categories of videos for traders and investors. An amazing amount of learning that you can do in there. Over 300 videos. It might be getting up to 4 right now. 400. I keep saying over 300. So there is just, I don't even know where you could get that much information about everything about trading, basically. Style, strategy, plan is one thing that we do. Trader psychology is another category. Stock sectors, big picture analysis, and of course future speak. And much, much more. So all of that included in this special that I'm telling you about. Plus, our we call it the SIR, the Stock Index Report. This ever expanding base, essentially a base type membership that we have that gives you our analysis every Thursday on the stock indexes. We share our charts with you, we share our momentum indicators with you, and we do the analysis and tell you what we think, essentially. That's just amazing. You could buy that stock index report for just $19 a month if you just want that on its own. But in the meantime, everything I just said, all the charts, all of the information for level 3, level 2 stock index report, all of that, just $73.50 for the trial month. If you want to try that, just send me an email. Go to our support, or you could ask support. Go to our contact support or contact us tab in the website, and then just let us know you're interested in the level 4 trial, and we'll be glad to send you that link, and then you'll be able to sign up for just $73.50 for the month. Do all the binge watching you want, all of that. You don't like it, you don't want to go any further, just let us know you want to cancel it, and we'll be glad to do that for you. That is the promo for now, and it's important that we build our membership so we can keep bringing you every week all of this amazing information about the market and support you as traders. As I, after now 44 years as a trader and being involved in the markets as an analyst and a coach, pay it forward and really try to share all of that information with you. So please do become a subscriber. All right, so now let's get into the best and worst stocks for the week. And we're going to start out by looking at Abercrombie. Abercrombie is the best stock for the week with an amazing 30% gain. The stock launched on the upside after its earnings, as earnings report expectations were pretty depressed. You can see the stock has been very weak and now is showing you that it's making some kind of a bottom. So this is interesting. You see the double top note up there. When this happened, we let our subscribers know. When there was a breakdown right over here, we let our subscribers know. We put the measurement in there where we thought it was going, and you could see it actually got within a point of that measurement right over there, which is pretty amazing. Now it has a megaphone bottom, and for those of you that are students to our cycle analysis, and you can become a student by also subscribing to our cycle analysis workshop. You can see in here, these are the ideal cycles on the bottom. Those are called cycle brackets, and they tell us where the important lows should be and how the ideal movement should be. And when you add in the energetic or directional components, that's what moves the stock. And we put in support, resistances, and all that. And in this case, that low right over here, you could see was maybe a couple of weeks later. That often happens in a bearish condition, like I just said happens in oil. And now look at the size of this up week as it gets to this neckline right over here, which is the 50% retracement, and the spot where we think the stock is going to have trouble. So a bottom in place clearly nearly makes the measurement, megaphone in place, which says probably a very significant bottom, but now getting into a very tough spot. We do not expect significant upside movement in here, with a projection up here about 22.5 to 24 in here as the best that we would see, and then potentially rolling over. Once you get through a long period in here, if the stock or company begins to perform, you would then expect that it would do a lot better. So it took a little bit longer analysis in there for you to see, but this one really looking like it's made a bottom. This stock was on our riskiest for the list, riskiest list for the year, and it actually was really starting to suffer and looking like it was going to be down for the year, and it was until this week. So overall, this ANF pattern, we will call it bottomed, with probably a lot of work to do before it's much better stock.
You have just watched the opening of the Market Week show. To watch the complete show, just go to the askSlim website and become a Level 1 member. It's no cost to you. It includes Slim's cycle analysis on the best and worst stocks for the week, plus his analysis on the short-term view for the coming week. There is always a lot to learn about markets, technical analysis, and potential trading and investment opportunities. You get the full Market Week, including the archives, special viewing of premium videos, sneak peeks to new product launches, and more specials along the way. Just become free an askSlim Level 1 member.
I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been